In the following chapters, we are going to review a series of indicators that can be used to time the market cycles. But before doing that, I think it's very important for you to have some context on Bitcoin's historical price action and cycles. So I want to introduce you to Bitcoin's monetary policy and to its 4-year cycles. So let's start from the beginning. Bitcoin's white paper was published at the end of 2008, but the first known transaction where Bitcoin was exchanged for dollars was at the end of 2009. And as you can see on this chart, it's really in 2010 that we start collecting regular price data. So that's why this chart starts in 2010. On the y-axis of this chart, you see the price of Bitcoin. Notice that we are using a logarithmic scale, which allows us to see the variations in price. Because the price has gone up exponentially over the past 12 years, if we didn't use a log scale, then basically we wouldn't see much. On this log scale, the distance between 10 and 100 is the same as the distance between 100 and 1,000 and 1,000 and 10,000. So basically every 10x move has the same distance on this chart. So let's look at the price evolution. So the price was less than $1 in 2009 and 2010, and the price reached the symbolic $1 mark early 2011. Then the price massively rallied to $29 in June 2011, but then crashed down to $2 just a few months later. So we saw a massive 30x rally followed by a 90% drawdown in 2011. Crazy volatility, which can be explained by the fact that it was starting from such a low base and it was such a disruptive idea. And we'll see that this trend repeats itself over and over again. Every time there's a big price increase, it's followed by a massive drop. Boom and bust, boom and bust. But every time it crashes down higher than the previous cycle, and so the long-term movement is going up. So then the price started climbing up again, reaching about $10 by November 2012. That's when the network had its first halving event, which is the first dotted blue line. A halving is an event that happens roughly every 4 years. It's programmed in the code. We know it's going to happen. There's been 3 halvings so far, which we can see in the blue dotted lines on this graph. So the way it works is that before November 2012, miners were rewarded with 50 Bitcoin every time they mined a block. After November 2012, that block reward was half as much, so 25 Bitcoin. And so that's why we call it a halving. So that's how the block reward went from 50 to 25 to 12.5 to 6.25 today. These halving events are the catalysts that define phases in Bitcoin's history. So we've had 4 phases so far, which I've numbered 1 to 4. So let's go back to November 2012. A few months after the November 2012 halving, the price rallied to $230 in April 2013. Then it crashed back down to $68 just a few weeks later, and that's minus 70% drop from its April all-time high. But quickly, the market started heating up again, and by the end of that same year, the price had hit $1,000. So 2013 was a mad year. The price was up 34x higher than the 2011 all-time high. The boom and bust cycle repeats again. The leading Bitcoin exchange at the time, Mt. Gox, an exchange that handled about 70% of all Bitcoin trading worldwide, got hacked early 2014, and that completely destroyed the market. By Jan 2015, the price was back down to $200, so another 80% drop versus the December 2013 all-time high. Fast forward a bit, we had the second halving in July 2016, and that served as the catalyst for another bull market, taking the price all the way up to $20,000, so 20x higher than the previous cycle all-time high. Massive growth. Some of you might remember those 2017 bull market days. It was absolute madness. Everyone was talking about Bitcoin. It was proper euphoria. But again, boom and bust. After the big run up, fear takes over the market, and in January 2018, the price crashed. The bear market lasted about a year and bottomed in December 2018. And so at that stage, the price hit about $3,000. And again, we see an 83% drop from the previous all-time high. So that brings us to today. We've had the third halving event in May 2020. Block reward went from 12.5 to 6.25. So that's 6.25 Bitcoin generated by the mining community every 10 minutes on average. So on a daily basis, that's about 900 Bitcoin on average. Like it did in the past, the halving event created a supply shock. All of a sudden, overnight, new supply of Bitcoin dropped by 50%. It's like if Ferrari announced overnight that it would cut production of new cars by 50% forever. And that would cause the price of existing Ferraris to increase because of increased scarcity. As you can see, the May 2020 halving and supply shock kicked off a new bull market. The price today, as I record this, is between $55,000 and $60,000. So we're already 3x the December 2017 all-time high. And nobody knows where we are in the current bull market. Are we 20% in, 50% in? Have we reached the top? That is a question I will answer later in this course. So now let's take a step back and look at the cycles, and a couple observations come to mind. First of all, so far, every boom was followed by a bust. You notice this constant boom and bust rhythm. The booms are extremely powerful. We saw price jump 34x between 2011 and 2013, and then price jumped again 20x between 2013 and 2017. Now, if the booms are powerful, the busts are also of extreme magnitude. As you can see on the graph, we had a minus 90%, a minus 70%, a minus 80%, and a minus 83%. Just imagine that feeling of having 80% of your portfolio evaporate. It's brutal. That brings me on to an important point. We hear a lot people say that, oh, those who bought Bitcoin at $1 got lucky. And perhaps they did, but also perhaps they were visionaries. But most of them also sold when the price went up 5x or 10x. Holding your Bitcoin for a long period of time is extremely rewarding, but also takes extreme conviction and faith. So in the Bitcoin world, buy and hold is a very powerful and very simple strategy, but it requires to have balls made out of steel and be willing and capable to hold throughout at least one cycle, so at least for 4 years. And this chart also shows that there are points in time when the market is overheating, and it makes sense to hold off a bit. If you buy the top of the cycle and see an 80% drop, that's going to be very disappointing. But you can buy at the bottom of the cycle, and that's going to compound and magnify your performance. So we'll cover strategies and tools to do that later in the course. Another important observation is that the magnitude of price appreciation decreases with time. So we saw an initial 34x from phase 1 to phase 2, then a 20x from phase 2 to phase 3, and it's likely that we'll see that multiple go lower from phase 3 to phase 4. It's natural and it's to be expected as the market cap of Bitcoin is becoming orders of magnitude bigger each time, and so harder to move, and it requires orders of magnitude more fresh money to keep it going. So this is just the sign of an asset class that's maturing. Final point is the 2013 bull market, what I call here the second phase of Bitcoin's history. What's interesting about the second phase is that it has two tops, one in April 2013 and one in December 2013. And that's not something that we saw in the first or third phase. So I think we need to stay open to the idea then that the 2021 market could also have a double or even a triple top or something entirely different. But we'll discuss this in more detail further in the course.